Welcome back. Hope you enjoyed that last chapter. Now let's get into a session where we start to look at some of the money of real estate. Isn't that fun? So remember, we've said before that real estate is something that's bought and sold for a profit. That is why we do this. Of course, we want to make a career out of this. And land and real estate is bought and sold for a profit, which makes it a commodity. It's a word we don't talk about in everyday language, but what is a commodity? A commodity, by definition, is anything that's bought or sold for a profit. My shirt is a commodity. The oranges and grapes and bananas that we had for breakfast, those are all commodities. Your blue jeans, anything, your vehicles, anything bought and sold for profit is a commodity. And the interplay of exchange for money is just as much a part of the real estate business as it is whenever you're buying or selling your apples and your bananas, right? If there's a ton of bananas this year because the crops are really, really good and bananas are plentiful, what happens to the price of bananas? It goes down. There's so much of it. It's like clearance rack. Everybody buy these bananas. They're turning brown. Just get rid of the stinking bananas, please. Like everybody's making banana nut bread. You know, we're doing everything with bananas because the harvest was plentiful that year. But at the opposite, in Georgia, we're the peach state. If we have a really bad, hard, hot year with not much rain, it can damage the peaches. So what happens to the peaches? They get really expensive when there's not very many of them because y'all still want your peaches. You're still going to want your peach milkshakes and your peach cobblers, if that's a thing anywhere other than Georgia. And you'd pay top dollar price for it. Well, guess what? Real estate works the same way. So in this chapter, this section, we're going to get into a little bit of some of the things that makes real estate more or less valuable and how the interplay of free trade and purchases and sales in the market affect real estate in specific. So the first thing we're going to talk about is supply and demand. Just like the bananas. How much do we have and how many people want them? Your book gives you an illustration about supply and demand, and think about it. If a whole lot of people want something and there's a lot of a demand for it, what's going to happen to the prices? When people are clamoring for an item, usually the price goes up. We have like bidding wars for it. I always tell the story about a factory in the Augusta area. Back several years ago, maybe 10 years ago, there was a sugar factory where we created sugar and mass-produced it and shipped it out all over the place that actually had a fire and exploded. Horrible tragedy. There were people injured. It was a really bad thing in Augusta as an area and a community, but also really affected the supply of sugar that went out everywhere. So I mean, before that, if sugar was, I don't know, $3.50 for a 5-pound bag on average, after a month of having no sugar on the market, everybody really wanted the sugar, and once it first started hitting the market again, the price was almost triple, and it affected the whole country's sugar supply. So imagine when that happens in real estate. Well, we're not going to have a whole area, I hope, explode and not have any houses, but imagine what could change, or think for a second, what could change the supply and demand of real estate in an area. Your chapter is going to go into some details about how jobs can influence supply and demand, how normal everyday situations can affect the value of properties based on how many people want them and how many there are available. And there's lots of things that can change that. Even the price of building materials. If the price of building materials goes up, prices are going to go up. They have to. So you have to match the supply and the demand in real estate. So, price and value. We look at value as a fluid concept. A piece of property is like any other commodity. It's only worth what somebody's willing to pay for it. So, a property in a certain area or certain conditions might not be valuable to one person, but could be very valuable to another. So, price and value, like I said, are two comparatively fluid concepts depending on what the property has to offer, and also also how big of a pool there are of people that want to buy that product. I've mentioned that I live on a lake now. It's a long time dream of mine to live on the lake that I grew up living near. And there's some people that look at my place and they say, oh my gosh, I'm so afraid of snakes. I could never live on the water like that. Well, that could be something that affects my value. Either you're going to love it or you're going to hate it. But the fact that I live on the water might eliminate some buyers from the potential buyer pool. It's okay with me because to me, it has a lot of value. I happen to like it. And each property is going to have its own characteristics, whether it's the location, the layout of the bedrooms and bathrooms, how big your living spaces are, how big the yard is, maybe how close you are, how far away from neighbors. Every property is different, and depending on the demand for that individual property, it can definitely have an effect on the value of that property itself. What's the difference between value and price? Value is what we think an item is going to be worth, depending on what a seller is willing to accept and what a reasonable buyer is willing to pay. Price is usually, and more specifically contract price in your book, is what that buyer and seller actually agree on to be paid for that property. So whenever you hear real estate terms, sometimes you hear about it being a buyer's market or being a seller's market. How do you know which is which? Think about who has the advantage. When there's a lot of buyers and not very many houses currently on the market, like in our market in Augusta, we've had a recent huge influx of businesses, lots of new people coming into Fort Gordon. They're making Augusta the cyber security capital of the nation. We're building lots and lots of new cybersecurity buildings out on Fort Gordon. We have a new training center. So we've had thousands and thousands and thousands of new residents coming into the Augusta area over the last 5 years. That's been a huge demand. There are some builders that say, I can't build houses fast enough to keep up with all the buyers that want to buy. So what do you think's happening to prices in our area? They're going up because there's lots of people that want to buy, and we're having bidding wars day after day over houses anytime we can get one to come on the market. So that definitely affects your market. So right now we say that it's a seller's market in Augusta because the sellers have the advantage because there's bidding wars and there's more buyers than there are sellers. But what happens if maybe you're in an area or a downturn in the market where not as many buyers are motivated to buy and there's tons of houses listed, tons of houses available? What happens? They start putting their houses on the clearance rack because anything can buy on clearance or anything can sell on clearance, right? So you'll start to see the prices drop as a way to entice buyers to buy that property in specific. Whenever a balanced market happens, it's when the buyers and sellers are about equal. Nobody really has a strong advantage, and they call that market equilibrium or a balanced out real estate market. So let's look at some of these economic characteristics of real estate in more detail. Your book specifically mentions supply and demand, price, the cost of building, different things that cause properties to be valued, and we'll go into deeper detail in the next chapters about value and what makes a property worth money. So in real estate with supply and demand, we've talked about some of the things that indicate what the property could be worth as far as in a buyer's or seller's market, but what other things could make a property more or less valuable other than just supply and demand? Think about the location. Some locations it might be more appealing to others. Again, the layout of the property, the base employment, how many jobs are available in the area, what school districts are available. There are so many things that change the economic availability of properties and also that affect the value in real estate for a certain area, and they all play together. If you have 5 different businesses in a certain area that have a huge amounts of employment opportunities that maybe all shut down at the same time, it could have a seriously negative effect on the real estate values in that area because, again, we've dried up the demand for housing. So it all works together. You have to have good employment, you have to have properties, you have to have a constant supply of people that want to buy in an area, and all of those things work together to make what we call the economy of our real estate market. So if you have a background, any type of economy mindsets or any kind of accounting backgrounds that would really make you like to dig deeper into the details about the things that affect the actual pricing, you're really going to enjoy this section as you get into more details about what makes property valuable and the economics of our real estate market. So enjoy this section.